Hello, my name is Ati Sherpa. I would like to present our key strategy of our portfolio management. This is a trend changing pattern, and this is the right example of the pattern what we are looking for in the first step. This is the bad example. The difference between the two patterns, when we can find monotonic rising bottoms on the chart, and the last bottom is breaking without forming two tops before the break, we have identified the first rule of the strategy. The difference here, the second top has been formed before the break. So this is the right pattern what we are looking for in the left side. Actually, we have to analyze the charts via tops and bottoms analysis. Now let me show on the chart how it looks like when we are trading. In this example, we have drawn the lines, so the bottoms monotonic rising what we can find on the chart. Actually, we have here the last bottom. Here we have found when this candle closed under the last bottom. That means we can switch off a lower time frame to identify where gonna be the second tops of the trend. So right side of the vertical line on a lower time frame, we're gonna analyze the correction trend, and we have to identify when it's over this correction trend, and we can open a sell position. Now I'm gonna switch off the lower time frame to analyze, because we have found the pattern. So we have a closing under the last bottom without forming two tops, because here is only one top on the picture on the chart. And now when we are changing the time frame for a lower one, we have to analyze the correction trend. Now we can find the second bottom of the trend, which means this is really a correction trend. Now we have to identify when this rising trend, correction trend, is over. In my analysis I found here, and I think this is the right one in this perfect example, when this correction trend has been finished. This candle, it's closed under the last bottom, and we can analyze also the tops. So here it's closed under the last bottom, the correction trend. We can analyze this correction trend if the last candle it's not closed over 78.6 of Fibonacci. If it's closed over even one pip, the candle, we are ignoring the trend and we are not considering to enter. This is very important tool, because a correction must be not higher than 78.6. Okay, let's talk about the stop loss and the target price. We're gonna calculate right now. This is the bottom which has been fallen, and this candle which is significantly closed. So we're gonna enter the trade, the closing price of the candle which caused the breaking. And now we can calculate the stop loss. The stop loss will be placed over 30 pip the last top of the correction trend. So let's calculate 1.3408 and we have to add 30 pips. So it's gonna be 1.3438. This is our initial risk. So that's mean if we open a position, we have to make a position sizing 72 pip, what we have to calculate, and this is cannot be more than 2% of the equity. I'm gonna calculate the target price. So the initial risk is 2%, which is 70 pips. So I'm gonna place twice on the chart the initial risk and calculate the final target. This is the twice of the initial risk, 1.3220, and this is gonna be our target price. So if we open here the position, we can see the market has reached the target, which means we realized 4% profit. It's very important to note this is a setup and forget strategy, which means if we have calculated the right stop loss and target price, we can set up and forget the trade, so we mustn't touch. Also important to note, we have to trade this strategy when the market is liquid. That means the traffic is high on the market, and we are not trading this strategy when a significant economical news it's close in the time. So let's say 1 hour before we did not open the trade, and after 30 minutes open if any currency will have a significant news. That's very important. Now let's talk about the other direction of the strategy, because now we have checked when we have to open a sell position. Now we're gonna check when we have to open a buy position, so with the to the other direction. So everything's gonna be the mirror. Now we can find the monotonic descending tops, which the first term of descending trend. Now we can see on the picture and the chart here broke the last top of the trend, which means the descending trend, the downtrend, has finished. Now we have to find a new trend, which gonna be a uptrend, and we have to consider to open a position to the upper direction. This is the bad example of the strategy. Now here you can see the difference. It's the same if we would open a sell position, and here the other direction will be considered. Here in the bad example you can see there is two rising bottoms before the break, instead of the first example, which is the right example. There is only one bottoms before the break. Now let's analyze this on the market. I'm gonna clear the lines. Okay, now we have reached around here the position what we have opened. Now we have to analyze the other side of the market. We can analyze if we find two descending tops. That means the market has changed. Let's say this is a second top, and also we can find here a significant top, and here we can find the right example of the pattern. So the first top, when we identified this pattern, the market has broken this last top of the market and hasn't formed the second bottom before the break. So we can find the second bottom after the break, which is the right example. On the right side of the vertical line, we have to identify a correction which is a descending downtrend. Let's say a correction. We're gonna switch off the lower time frame to find the new correction trend. So we are on the right side of the vertical line. The vertical line has been placed because this is our closed candle, which means the market has changed. Now we have to identify a correction trend. If we would like to be very precise, we can find the tops descending because the closing price is lower than the last and the first tops of this correction. So we have to be very precise to analyzing. This is the first tops and this is the second one. The same rule is very important if we open a buy position. We have to check the swing and the correction, how big was. If the correction coming under 78.6 of Fibonacci, we are ignoring the trade. So this is very important rule. Now we can see where the market is closed over our correction. That's mean we got the second bottom what we are looking for, and very important because the second bottom of the higher time frame mean we have a valid rising trend. Now we're gonna calculate the stop loss of the strategy. We have to open the position if this candle has been closed. We're gonna place the stop loss under the lower point of the correction, which is 1.3228, and it's gonna be 1.3198. So this is our initial risk. We're gonna calculate twice the initial risk to get the target. This is the fastest way. Okay, and you can see here we open the buy position here, which is good because the market has reached the target, which means we have realized 4% profit if our initial risk position size for 2% of the equity. Very important to trade in under liquid traffic on the market, even a currency market, even other financial market. We have to trade under liquid traffic. That's very important. I think before very important news, economical news, we mustn't trade because it can be gamble. So have a very successful trading, and I wish everybody a lot of profit. And this was Forex Sherpa Trading Group. Thank you very much for you to finishing our online course, and have a very nice day.